And when I say my team is here for me, I'm always happy to start with money, because if you don't have money in your pocket, then all the rest of it's kind of difficult to deal with. Buying gifts, having a good heart, and taking things forward. Yes, your health is important and we'll deal with it, but to get the urgency of the dollar in our pocket at this time of year, we have Darren Farwell of Scotia Wealth Management. And last time you were here, I guess it's 2 weeks ago, Darren, you surprised me because you mentioned you had a designation of a certified divorce analyst, and you gave us points on how to deal with a divorce. So anyone listening, just if they wish to hear about those 5 points, the show is archived on marilyns.ca, and every single show within a day or two of you hearing it here is there, so you can share it or you can re-listen. So if you want to learn more about the points of what you can do to protect yourself financially and prepare yourself financially for a divorce, then know that Darren's interview about being a certified divorce analyst is on my website, marilyns.ca. And good morning, Darren.
Good morning, Marilyn. Fortunately, we're not getting too many of stories right now this time of year. And what I'd like to do today, well, what's on my mind outside of snow, and yet more snow, are a couple of stories I'd like to share with the listeners. First, given the important news from the Federal Reserve in the U.S. that they have hiked interest rates 25 basis points, so it's clear that interest rates in the United States are certainly going higher. Not only did they hike interest rates 25 basis points, or 1/4 of a percentage point, they are anticipating 3 similar hikes through 2017. So I'll talk about that and what it might mean to you in your affairs. Second, I want to share a happy story about a couple that, well, frankly, flee this kind of weather at just this time of year, every year. They're the classic snowbirds. Okay, to interest rates. What's happening and what that might mean to you and your financial health. Well, the fact that the U.S. did hike interest rates this month really was no news, because investors by and large anticipated, in fact, going into the week, they thought there was a 100% probability of a hike in interest rates, and you don't hear much about 100% probabilities in the investment business too often. But the hike this month was an example of precisely the same, but different. Because if you remember last year in December, the Federal Reserve in the United States hiked interest rates 1/4% then as well. And about a week after they hiked rates, they said that they were going to raise rates in 2017 3 times. What was different, though, is last year when they said that, the market had a big decline. In fact, the market last year in January and February was down more in those 2 months than it had ever been before. And it wasn't until towards the end of February when the Federal Reserve changed their mind and said they wouldn't increase interest rates until the economy seemed ready for that. This year was quite different because, as a matter of fact, even though they said they were going to raise interest rates 3 times, the market hasn't gone down at all. The world is a very different place at the end of 2016 than it was at the end of 2015. There are a lot fewer obvious risks out there. I mean, how many times did you hear about Greece a couple of years and what was happening in Greece and the financial problems there? We never hear about that anymore. Oil, which in 2015 fell below $40 and then below $30, is clearly and well above $40 now and probably in the $50 area. Britain, it seemed for a little while, perhaps was going to leave the Eurozone. That doesn't seem very probable now. We've been talking a few years about a burst in the housing bubble in China. Doesn't seem that that's going to happen. And now there's a new political regime in Washington, which at first felt like it was going to be really dangerous, but so far we haven't seen any negative impacts. So, when you look at what's going on around the world, feels a whole lot risky. And adding to that, the global economy is in pretty good shape. The U.S. economy is doing well. That's why they're raising interest rates. Europe has been very resilient as an economy this year, and we're seeing growth in Europe. Japan had one of the best years for growth in a very long time, and China is doing quite well as well. So when you look around the world, both economically and otherwise, It seems to be a much safer place to invest, which makes us believe that one should lean more towards stocks than to bonds. But what does all that mean to kind of us regular folk? Well, interest rates are going up in the United States, and they're probably going to go up steadily over the next couple of years. And even though our economy isn't in nearly as good a shape as the United States, Canada will likely get dragged along eventually. So that means interest rates in Canada over the next while are likely to go higher. What should you do about that? If you have something coming due, think about locking in longer-term rates. If you're not sure, you could at least do a little bit of both. Lock some of your rates in for the longer term and keep some short term. But clearly it looks like rates in both countries are going to go higher. The second topic today is a happy story about a 50-year anniversary. Not really a romantic one. It's the couple who goes to Florida, usually leave mid-January, and they come back in March. They've been doing it for about 5 years. Now, Rick had calculated it cost them about $21,000 a year U.S. to do that. So we started 5 years ago a monthly income fund that pays out a regular 5%. So we divided 21,000 by 0.05, and we got $420,000. He bought in U.S. dollars. It pays 5%, so through the year he accumulates the $21,000, then he takes it out and takes that money to Florida with him. That strategy has been working like clockwork every month after month, for 5 years. And we sat down together just last week, it was 2 weeks ago before they left, and we looked at his account. Remember, he'd started with $420,000. Well, looking at his account when he was there, we had $446,000. So not only had he made his regular 5% in U.S. dollars, but his capital had actually grown a little bit too. And by the way, since he has more capital, he's earning a little more than $21,000 now every year as well. So he's very happy that this very simple, easy strategy has been able to fund his ability to escape the snow the rest of us will be here shoveling.
So it sounds like you sat down with him, and you sit down with him every year and sort of give him a path so that he can stay on target. And do you do that for all your clients?
Well, it's always about sitting down and finding out what's important, what the plans are, and then what's the best tax-efficient way we can make those plans happen.
And you offer to do that for me and all my listeners, right? So if anyone wants a complimentary consultation, it's the same money, but it can work hard or it can work less hard and be less productive. And the best way to find out if your money is working hard enough is to have a financial plan. Darren, you've said before, it's never too late to have a plan. And I guess a second opinion is always worthwhile, because some people put their plans to bed a long time ago and sort of are just living with the results. And I know that you're not feeling well today, so you're probably not going to go to work, are you?
No, I'm going home to shovel the sidewalk, Marilyn.
Oh, with a cold. Well, anyway, Darren will gladly give you a complimentary consultation if you call him at 416-863-7501. That's 416-863-7501. You don't know what you don't know, and you can be proactive. If your dream is to be a snowbird and go away every winter, and you want the money in your pocket and you want your capital to grow, it seems it's possible, because Darren has done it for Rick and his wife, and his capital has grown, and he's been doing this for his clients since 1986. So a personalized plan, a complimentary consultation with one call to Darren Farwell, Senior Wealth Advisor of Scotia Wealth Management. Have a good week, and I'll see you Christmas Eve.
Yes, thank you, Marilyn.
Thank you.